So it looks like the pain's going to continue. Uh, I'm looking at Amazon right now. The thing I'm looking at the most is the 1 day, 1 minute chart. Even if you look at the 1 day, 3 minute chart, uh, it almost came back, but honestly, I think that we're about to fall off a wall. I don't think that there's a lot of strength in the chart. Um, I think that it's just gonna get uglier from here, and there's not too much anyone can say, any analysis that anyone can do, other than we're just gonna have to give this time, and don't catch a falling knife. It seems like it's gonna drop more. The Nasdaq's down over 3% right now. The Dow is down like 500 points, is what I was looking at, right? The composites right now look like everything load. But the composites right now, the indexes, so the Dow's down 482 points, the Nasdaq's down 245 points. They're down 3.3%. Dow's down almost 2%. The S&P's down 2.6%. They're down 70 points. All the FANG stocks are getting a beating today, but everything's getting a beating today. With the exception of Tesla. Tesla was floating around going green. I don't know if it ever went into the green, but so it's 0.25 into the green. So Tesla's having an absolutely phenomenal day compared to the rest of the market here. But again, we were looking at the earnings. I thought this was an easy thing to call. I thought that there was money to be made on but I was calling for a price target of 1,400, and I haven't seen that yet, and I am waiting for that number. The whole market is down here. You got MU trading at 36. You just there is turmoil going on right now, but the GDP wasn't that bad, and I feel like the whole market was ready to like collapse almost. I feel like things were ready to go down. The thing that I was thinking about is that this drop is a drop that no one on Wall Street should have lost any money on. No one on Wall Street should have lost any money on this. This should have it should have been easy as can be to read. But which is why it really was never going to collapse, in my opinion. But anyway, things are trading towards the low of day. In the bottom half, anyway, the only thing that aren't trading towards the low of day is Canopy Growth, which is up in the middle of its range. It's 1.4% down, and Tesla, which is actually in the green at 0.63%, 0.7% now. They're trading at 316, 317. So, dude, the FANG stocks are getting murdered right now. Amazon's down 9%. Apple's down 2.3%. Facebook's down almost 4%. They're trading at 145. Google is 4.07% down. They're trading at 1050, 1050. AMD's down 9%. They're trading at 1750. So anyway, everything looks bearish here. Dude, you look at this map. Let me just cross this map. But Intel's up. So that's good for Intel, but I don't know, the map's not. But anyway, so Intel's up. Everything's red, man. It's tough to talk about red days like this. This isn't good for anybody. It's tough to see, but it was easy to call. And yeah, dude, that's the midday. So Amazon's inching up to 10% down. I think they're gonna finish. They're gonna go to 11% down. They got to go to 11% down. Consumer spending was up in the GDP, and that was a good catalyst because I was starting to think, or we were starting to think that people might be starting to want to save, but if they're spending more, then the housing bubble doesn't seem like it's taking full effect. Housing numbers are going down. The GDP came out at 3.5. The median forecast was 3.3. That was the consensus. Someone had people had estimates of 2.5, and people had estimates of 4.4. So thank God the GDP didn't miss, because then we would really be looking at a red day. If the GDP missed, we could double these numbers, triple them even, and that would have been a whole thing there. Snapchat just is getting destroyed here. Where's Snap today? But Snapchat lost 2 million subscribers last quarter, and obviously that's not good. They took a hit. One thing that I want to talk about is that the hog industry, so the commodity of selling lean hogs. I saw a few weeks ago that the U.S. was having a hard time bringing them to market, and I don't know if it was the U.S. or worldwide. Thinking back on it, but now I'm seeing that the hog industry worldwide is being slaughtered by trade war. So hogs are obviously a very important thing, and pork is obviously a very important thing. So the hog industry is taking a hit. We're looking at trade war numbers with the hog industry. Obviously, it's not very good to see, but I wonder what the best way to make money off of that is. And what I was thinking about is, do you start buying the dip on the hog industry? Because people are going to need their pork, or they're going to start getting it in other places. But so the price of hog will be going up from what it says is going on. So the price of hog is going up. Are you saying the price of hog is going to go down long term? Because other people are going to. It takes like 6 months to grow a hog. So if there was a demand for a hog in a certain spot, it would take about 6 months to grow a hog. But maybe not on a mass scale. And then when the trade war is over, we'll be able to trade our hogs again. But anyway, that's what was going on. That's what I was thinking about, playing the commodity a little bit. Another thing I saw was Fang versus Man. Someone came out and said that you should drop Facebook and drop Google and pick up Microsoft. Keep Apple, keep Amazon, and keep Netflix. Now, I don't necessarily agree with that. I think that that's a reactionary move here. I don't think that's a ahead of the curve move here. I think right now you live and die by the sword, and that's what I think. So everything's down. Looks like we're gonna just have a red day, bleeding day. Prudential's trading in the 80s right now. It's at 89.76. General Electric is at 11.25. They're down almost 4%. I think the move here is to look at the companies that had really good earnings, like Netflix. But Netflix sold off even before all this. Look at the companies that, if consumer spending is still up and people are still spending money, then Netflix seems like a good bet. If people are still spending money, but the market is selling off, and I don't know. I think that there's an approach here. So the market won't crash. It's looking like now with the GDP, but we just had a bad earnings report season here. So we got not even a bad earnings report. We just got told the guidance is going to be down a little bit. So that's what we're looking at. These are the things. This is the update of the midday in the market. This is the Dan Dunn Show. Thank you for watching. Like, subscribe, whatever you gotta do. Have a good day. I'll be back at 1:30.